What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. In today's video, we're going to be covering the channel's favorite stock, and that is the SoFi stock, guys. And today has been a brutal day inside of the stock market, guys. Believe it or not, SoFi Technologies was one of the companies that didn't get hit the hardest. There was companies today falling 6, 7, 8% plus. So what does that tell you? The stocks are not reflecting what the company's performances are doing. Just because a stock is falling 8%, it does not mean anything bad is going on with the company. A lot of these days like this in the market are very targeted, from hedge funds and short sellers because everything is pretty much acting the same. But surprisingly, SoFi stock bounced back pretty quickly, but it did touch a low today of 1680. And like I've been saying in my other, videos for SoFi, as you can see here, I've been doing a couple of SoFi videos every couple of days. I've been explaining that this is an amazing buying opportunity anywhere in the 16, 17, $18 range. Nobody is going to time the market perfect. But if you are, new to the market, you're trying to get in on SoFi and start, nibbling away, anything in the 16, 17, 18 range is amazing buying opportunity. Of course, there's some people out there, oh, I'm going to wait for the 13, the 14 dips. It's just not a guarantee. Just know what a very, very, very solid discounted price is right now, and that is 16, 17, 18 for sure. And SoFi stock, as you can see right here, has two buy ratings already right after the merger with 61% upside, guys. $27.50 potential upside right now. And what's happening right now in the market is as this stock is going down, you know, lower and lower, your risk is potentially getting lower and lower. You'd rather, buy low and the market go a little bit lower than buy extremely high and the market, continue to go lower. So the lower you buy, the lower your risk is. So it's a great time to be buying right now. But this stock was down close to 4% this morning. As you can see right here, if we look at the 1-day chart, we touched 1680, guys. 1680 around 10:30 in the morning, and that's when the entire market, was just getting hammered. And I got another chart pulled up I'm looking at. The market is bouncing back very, very small as of right now at around 1120. So it was really bad around 10:30. But as you can see, everything acts the same at the same time. So these are definitely the days you want to be buying. But guys, we have some major catalysts coming up very soon that's going to also help the SoFi stock. And if you look at the 1 month chart on SoFi, guys, ever since this thing merged and about June 8th, which is exactly about a month ago, look at this. Absolutely tanked 35%, guys. You're getting a 35% dip from June 8th. On top of that, you're getting an additional another $4 discount because this thing was at $28 high, guys. You're buying very, very far off, the all-time highs. And the market cap has dropped even lower. We've been talking about this being a great buy at a 15 billion market cap. We're under a 14 billion market cap now, guys. And there are some major catalysts we're going to talk about real quick with the SoFi stock. And that is going to be the Robinhood IPO, as you can see in the thumbnail. And guys, these are a little bit different companies, of course. Robinhood and SoFi are both doing, stock market investing. SoFi offers dividend investing. They're going to get on board with the option soon. So these are very similar companies in different aspects, but just know that they are both high growth unicorns, fintech. So they do have very, close similarities. But the big thing is that I want to talk about is the revenue. Remember, revenue is one of the most important things about a company. Imagine, valuing a company off of no revenue. There's going to be nothing there. Imagine a company with zero revenue. It's not even a company. There's nothing there. So the base fundamental of any company, before you talk into margins, EBITDA, growth, anything. We're going to start with the revenue, okay? And the thing I noticed about SoFi and Robinhood, if you go to SoFi revenue for 2020 right here, it was said to be about $600 million. And if we look at Robinhood, they were doing about 900 million in revenue for 2020. So these companies are pretty much neck and neck on the revenue, about 650 to 950 million. So these companies are both right in the same category as far as revenue. And both companies are projected to do, over $1 billion in revenue this year in 2021. But what you need to know, guys, is Robinhood is going that IPO route. And what I've been explaining to people multiple times, the difference between the IPO and the SPAC route is, the management team is giving people an opportunity to actually make some big profits going the SPAC route. These IPO valuations are absolutely insane. It is greed. We saw Snowflake, 100 billion market cap. Coinbase, 100 billion market cap. Um, Airbnb, 100 billion plus market cap. Guys, these companies' valuations were out of this world. There's not a lot of wiggle room for retail investors to make a ton of profit in the short term, like a year to 2 years. So much is being priced in to these IPOs. And the Robinhood IPO valuation we're seeing, guys, is projected to be, I mean, look at this, 40 billion, 40 billion, 40 billion. As you can see, we're already seeing potential 40 billion plus on this Robinhood IPO. 40 billion. And guys, Robinhood has much larger losses than SoFi on top of revenue being, neck and neck. And guys, we're talking a 13 billion market cap right now at this valuation of SoFi. So think about that right now. If Robinhood is going to come out the gate and say they're going to be a 40 billion, valuation at IPO, most likely it's going to go much higher than that. We've seen this happen multiple times. Whatever these IPOs say they're coming out at, they go way, way higher. So I'm projecting, a 50 to 60 billion market cap valuation by the end of that first trading day. So what does that tell you right now? If we just go off of what the valuation is said to be at 40 billion, this is giving you potentially, in the next 12 months, on top of the tip ranks valuation that we already got after the first, earnings report. Guys, this is giving you potential a 3x upside of getting to that 40 billion to match the valuation of the Robinhood, IPO, guys. You got to get a 3x to get to 40 billion right here. And guys, the numbers are pretty much neck and neck. The growth, the revenue, SoFi is going EBITDA positive. Losses are not as bad. So guys, this is an amazing buying opportunity right now at the $16 to $17 range for SoFi Technologies. I right now have a average pricing in the higher 17s. I'm nibbling here and there, so my average is a little bit higher because I bought like a month or so, a month or 2 months back. So I'm a little bit higher than the price right now, and I'm not absolutely not worried at all. If this goes lower, you just gradually continue to buy. And if you, once again, if you want to go into more of the fundamentals on SoFi Technologies, you're gonna have to go into my other YouTube videos and watch those SoFi videos. But guys, as you can see, this Robinhood valuation, as you can see, is likely going to go 40 to 50 billion plus. So that's just another catalyst when you're comparing, fintech unicorns with, valuations. You're getting much more upside on that SPAC route. And that's what I've been talking about. The management team with Anthony Noto, he is a great guy. He wants people to make money on his stock. He's not greedy. They went the SPAC route. They could have easily went the IPO route, guys. SoFi could have unicorn market cap valued at 60 billion plus. This could have easily happened if they went the IPO route. This could have came at 60 billion plus. They would have took all the gains away for 2 years to come. Nobody would have made any gains at all on this stock if it was sitting at 60 billion. That would have put a, valuation of 60x multiple on their revenue of 2021 of $1 billion. So as you can see, guys, this is a great buy right now with the potential high growth they have. And if you go to bar charts today, guys, if you just look, I'm being honest, it's an absolute, you know, madhouse today. Look at this. Companies are getting obliterated. Look at this. 8, 7, 7, 6, 6, 5, 5, 5, 5, 4. Companies are getting smashed out of this world. And there's some great buys right now, guys. Absolutely great companies getting sold off for no reason. ChargePoint has high growth. Neo has high growth. Open Door Technologies high growth. Skills high growth. I mean, it's just crazy, how manipulated today was inside of the market, guys. This is a great buying opportunity. And another thing is, SoFi Technologies reported blowout earnings back in May ahead of the SPAC merger. Imagine having blowout earnings and your stock getting no credit for it whatsoever. Absolutely selling off for 4 weeks straight, guys. Do you understand how manipulated this market is right now? This stock reported blowout earnings. This is crazy what's happening inside of this market. SoFi reiterated its full year 2021 guidance, with the fintech company forecasting adjusted net revenue of 980 million for the year, representing growth of 58% over 2020. Adjusted EBITDA 2021 is expected to be $27 million. So they are going EBITDA positive, guys. Sometimes this takes companies years and years and years to go EBITDA positive. So this is a great sign that the direction that their business model is heading into the right direction, guys. And no matter how much you dislike Jim Cramer, he can definitely be a bit old school inside of this market, definitely, avoids, the earlier stage companies, But the thing is, he was right about, the SPAC route, guys. We've had over 600 plus SPAC, companies go public, tiny, tiny companies, companies with no valuations at all, companies with no revenue at all. And as you can see, this is why the market really, really crashed back in February on top of that inflation news. It was just a perfect storm, for the SPACs to get absolutely obliterated back down to 10 and much lower. And we can see now that, 600 plus companies, you might find, a top 2% of companies to be buying that went the SPAC route. And Jim Cramer did go on his show yesterday, and he explained, that two of the top two companies that are going the SPAC route are STEM and SoFi, So this is in his top two plays, for the year for SPAC routes, because they have everything you could ask for. They have, disruption, they have growth, they have revenue, they have, EBITDA positive coming soon. So this is why, the SPACs have a bad name, guys. SPAC IPOs, 600 in the last, 1.5 years. This is crazy. Look at the size of these SPAC IPOs, 300 million. These are tiny, tiny companies that should not really be going public right now. Too early of a time frame. So 600 plus SPACs, I would put, SoFi in the top 5 right now, okay? The top 5 for SPACs. And also, in the top 5, I would also have to go with, Chemist other SPAC, Open Door. This is a fintech play that is going to disrupt the real estate market and is trading significantly undervalued compared to its peers. So not a lot to talk about right now. SoFi is staying pretty quiet, after this merger. There's not a lot of catalysts besides, that big Robinhood IPO catalyst. But, the next thing you have to look forward to, of course, is going to be their next earnings report. And if they hit it out of the ballpark as well, this may make a run back up into, the price targets of the analysts, around $27. So I just wanted to show you guys, I already did the, valuation compared to the Snowflake. Guys, the valuation compared to Robinhood as well, it could give you potential 3x upside as well, in the next 12 months is a possibility. So my personal price target on this stock, you know, heading into, the new year, maybe New Year's football season, Super Bowl time and stuff like that. I could see this by the end of the year being a $40, $45 plus stock. So that's a lot of upside right now, guys. Definitely over a, 100% upside potential right now. So it's a great time to be buying. Um, Market pullback today, a lot of red. All the companies are moving at the same time. So I just wanted to show you guys, don't be afraid to buy these dips right now. You got to stay true to your gut feeling and why you're buying the company in the first place. So if you felt this video gave you any better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. I hope you have a great day.